Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. Pleasure to be joined with Don Mosher, who's the president of Desert Mountain Energy. Great to see you in person, Don.
Yeah, finally meet.
It's
good.
It's great to have you here. It's a pretty crazy period of time. I think we all can see that.
Yep.
You get to see it not only from a long, great experience in the markets in general, but you get to kind of laser focus on specifically helium here. Why don't we talk kind of about the macro themes and what's going on, and then exactly helium, what's happening?
Yeah, I mean, we're seeing massive inflation out there. It's impacting us. We bought a trucking fleet. We paid $715,000 for a trucking fleet because our trucking costs between August of 2020 on well number one being $25,400 escalated to $173,000 for down rigging on well number 7. So in 18 months, you saw, a jump in, what is that, 5 times?
5 times or so, yeah.
But it's impacting everything. It's impacting the cement and impacting the steel. You're seeing it with salaries. You're seeing it with the truck drivers. You're seeing it with everything else. And we've managed to combat inflation with a strong treasury.
Yes.
It's allowed Rob to go out and pre-order production casing and pre-order cement and pre-order diesel and pre-order all that stuff to stay at least ahead of the curve on it.
Yeah.
But, on well number 4, we saw a number of issues. We had cement shortages.
Yep.
We had to truck diesel in from Oklahoma and Kansas. We had all kinds of issues. And well number 4, despite the fact that it took $200 million off our market cap when we announced the well, first off, it identified the first field we were putting into production. It identified a number of issues that you're going to have drilling in Arizona.
Yep.
It's not a drilling state. There's
Yep.
been 1,200 oil and gas wells drilled in the history of the state. So when we're drilling a wildcat, it truly is a wildcat. There's no other well logs or anything else. We identified what kind of rig we need. We needed the redundancies on site, backup generators, compressors, make sure you've got your cement available, and all the rest of those issues. And, the last 3 wells went very smooth, 10 days on budget.
Yeah. And I mean, that's what I like so much from management is their ability to work fast and pivot and to deal with these problems and see, listen, I think there's going to be supply chain issues. I think there's going to be inflation issues. And we even say, I'll say it, not even kidding around, that you should go buy more at the store today because next week it'll literally be a bit more expensive. And that's a small case. But when you're dealing with hundreds of thousands of dollars, that all adds up very quickly to try to pre-order and to ship and to get things down to you. You've kind of taken away a lot of those issues by having a 5-truck answer that my understanding is basically going to be return of capital or profitable end of June.
Yeah,
or
more or less.
So you not only do solve a problem, you also have a bit of a cash generator as well.
And I know people are concerned that we're losing focus.
No. Yeah.
I mean, they need to understand that to start with, when Rob and myself took over management, it was Rob doing everything.
Yeah.
I mean, I dealt with the capital markets and raised the money, but Rob was dealing with the trucking and the leases and the cement, sitting on site and drilling the wells, identifying the target. It was all him. And now we've got a really good team around him, and he can start to look at a bigger picture out there and start to basically map out our future as we move forward.
Yes. And I mean, when people say lose focus, I look at that as being hyper-focused because these issues, you go, well, let's just ignore it and we'll deal with it whenever we get all the other stuff done. No, we can do it right now. It isn't a huge onerous undertaking. You've done it. They're locked in for 26 months or so. They've got tons of work and it becomes a cash center. To me, that is more of a positive.
Right.
And it shows to the extent of planning ahead and looking at all these factors. Whereas a lot of other companies, they haven't put that kind of time. They're just exploration, or they're just hyper-focused on just finding something.
You know, and we've managed to put the trucks into another entity that's owned by Desert Mountain Energy, so we get the cash flow, but it's being managed completely outside what we're doing within Desert Mountain Energy.
Yeah.
So we are hyper focused on the helium and looking at the noble gases down the road and how we're going to exploit our hydrogen discoveries, that type of stuff.
Now, before we jump into hydrogen and whatnot, let's talk a little bit about, and we talked a little bit before, like the situation with Russia and helium. I'd put out a report before talking about the fire they'd had in that one,
the Amir complex.
The Amir complex. That was before the Ukraine war.
Yeah.
Now we've got a bigger development, and I'll let you kind of take away from that as well.
Well, now Russia's announced that they're going to stop shipments of helium and neon, basically to the West, and they will cut deals with chip manufacturers. You send us chips, yes, we'll supply you with helium. So I don't see the Western countries coming to that kind of agreement. We're going to see that coming out of Asia, I believe.
Yes.
But at the same time, I think the West can put pressure on Asia. Russia's not a big enough market for you to survive just selling to Russia. And if we start to quit doing business with you, like, blackmail can work a number of different ways, as long as everybody gets on the same page. And I think that has been the biggest issue out there, the weakness of our government leaders and their lack of foresight.
Yes. I mean, we talk about that a lot on the show, is that when you have weakness around you in leadership and everything, it has to be reflected in markets. It just does. Yeah. There's chaos. But within that chaos, we can't control what we can control. And I mean, I think Desert Mountain Energy is a great example of that, of you're still hitting milestones. You're still doing what you say you're going to do. You're still charging ahead. And of course, the stock is pulled back. But to me, stocks can pull back. They can move up. They can do everything. They don't necessarily reflect exactly what's happening in a company.
Right. You know, we've been de-risking the situation since August of 2020. We were a grassroots exploration company that had drilled 2 holes and hadn't even sampled them. And here we are looking at taking delivery on modular housing units for a processing facility here within the next month.
Yes.
And setting up a processing facility. And I don't want people to get confused with processing and refining. They're 2 different things. All we're doing is taking a mix of gas coming out of the ground under natural pressure and separating the elements. And if you take a look at our last 3 wells, they were plus 96% nitrogen, 3.511% helium, 0.0205% CO2. That's relatively simple to deal with, as opposed to a natural gas where you've got water, condensate, sea gases. And if you've got hydrogen, it's probably in relationship with sulfur. And now you've got something that degrades your metal.
Yes.
We're blessed, and we've got a sulfur-free system. Our hydrogen is in a pure form. It's at lower levels than where we're drilling for the helium. So when we go to put the helium or the hydrogen into production, we'll be drilling different wells for the hydrogen than what we're drilling for the helium.
Yes. And this is the other thing when people say, oh, well, now are you a hydrogen company or are you with this? And it's like, listen, why would you ignore the hydrogen or pretend it's not there whenever you've got a significant hydrogen? And we know that hydrogen is going to play a very critical role in the future here. Yep. So it's another kind of these ones that people will have a criticism about. We say, well, why on earth would you not put a focus on that as well and say, we're a helium company, but we have this as well. Here's our strategy.
Yeah. Well, I mean, if you want to invest in the helium market right now, you're basically going to have to invest in Air Liquide, Matheson, Air Products, one of the specialty gas suppliers. We're going to be doing what they're doing. We'll probably be signing deals with other producers, and they'll be signing offtakes with us. So really what we're building is a vertically integrated company that's a primary helium producer that has the ability to drill their own wells, produce their own wells, process their own gas, and sell directly to end users. And that uplift that you get from the crude helium price, that everybody's got to take it to 90 to 95% to sell it to those guys.
Yeah.
They get the crude price. It was 300 3 months ago. Now it's 1,000. And Then they uplift it to 15 or 2,500 plus. So they're building a margin in there with minimal processing and handling charges that gives them a lift of 1,500 to wherever they can get the sale price. I'm hearing as high as 8,000 in MCF. We're looking at 2,500. We think 2,500 for what we're produce is good, and our margins will be over 90%.
I mean, that's incredible. And that answers the question of, oh, why don't you have offtake agreements? And my counter is, why would you sign any long-term agreements with anyone right now with the supply demand as it is, with the geopolitical factors going on, and of course, the pricing?
Yeah, and I mean, I'm getting emails from Europe here this morning, guys saying, where are you getting these numbers? And I'm saying, well, basically, we're running with, call it industry gossip, if you like. We are talking to end users that are looking for product. And, they're telling us what they're willing to pay for it. But it's such an opaque market because 96% of that market's controlled by 3 companies, and anybody doing business with them signs a non-disclosure agreement. And if you break the non-disclosure, they cancel the contract. But right now, they've already canceled the contracts with force majeure and cut back everybody's supply anyways to 45%, give or take. So you're seeing labs shut down, you're seeing MRIs shut down. People are scrambling. They don't know what to do right now.
It's insane. I actually saw just a snippet article from I think it was Windsor, from Windsor, Ontario. It was talking about the hospital there, the MRI machine, and they were low on helium. They needed to get it. Yep. And it's just interesting to see a small town, Windsor in Ontario, and they're talking about helium.
Yeah, well, I was in Europe 2 weeks ago with Rob, and the guy we were traveling with was from England, and they were shutting down MRIs in England. So this is a global situation, and we're not going to solve it. I mean, we may be able to produce 2 or 3% of the global demand. Yeah. So we'll help in around Phoenix area where we're 2.5, 3 hour drive, and that's very advantageous because helium escapes.
Yes.
While it's being trucked.
Yes, and I mean, and what's great too is that you've got this stranglehold on a market, and you've got a long-term strategy. And I've talked to Robert about it too. Is there's very impatient investors that you have to deal with every day. Yep. And I get it. It's a tough market. There's lots of bad news and there's lots of gloom and doom. But there's lots in that gloom and doom. If someone positions themselves into companies like yourself, where you've got a strategic gas that's absolutely required, that has a supply issue and a price that's pretty attractive, that's a good place to be if you're an investor right now.
Well, if you compare buying Desert Mountain Energy at $3 with 7 wells into a processing construction, as opposed to $4.95 last year with 4 wells drilled. Yeah. And just the processing facility was kind of a dream. We had to put that all together. And we run with some issues along the way, but we're pretty much on schedule. I mean, one of the biggest issues was the plant cost went from 7 to 10.5 million. Yeah. Why? It was inflation. It's starting to kick in again. And it's impacted us right across the board. So we're keeping a very close eye on the treasury. And we don't want to, but we may have to raise some money in here, but it would be a very short-term thing. And we should be in positive cash flow by Q4. And I don't think at that point in time, you're going to see us doing any more financings. In fact, if everything goes according to plan, we'll be buying stock back and maybe paying a dividend.
Excellent. See, that's dividend talk was something that Robert had mentioned a while back. And it's really, that type of thing is exciting because that shifts the stock into a whole other category and discussion as well. Yeah. And that's, we won't jump ahead of ourselves, but that's, when you see that is a possible milestone for discussion somewhere in the future, that brings in a whole other investor right now too that thinks, oh, that's something I want to look at.
Well, Rob's got 4.4 million shares. A dividend would look good on a quarterly basis to him, I'm sure. And in addition to that, right now, we don't have any institutional ownership. Our ownership base for our shareholders is some large family offices in Europe, some sophisticated investors, and a whole whack of retail guys. Yeah. And when we get into production, that will demonstrate proof of concept. Yes. At that point in time, we'll have answered the question, can these guys produce their own wells? Can they run their own facility? I don't think getting people to buy the gas is going to be an issue. It's just, can we do it?
Yeah, and my guess, and you can tell me if I'm wrong, would be once that's up and you've run and you've tested the flow rates and everything, and then you go, here's the data. Here's what we can give the market, tell them. Here's what we're streaming in. Then a fund can go, we can come in now.
Right.
And then you could go, we could think of a NASDAQ list. We think of things because then it can move very quickly if they want to get positioned in.
Yeah, and I mean, one of the issues, and I understand the institutions, number one, it's such a tiny little space.
Yeah.
How do you go and deploy resources to even do the research on it?
Yeah.
And then you run into this thing where it's so opaque, you can't find anything
Pricing,
but rumors of spot price. And then secondary to that, we're not putting out any revenue projections. I am not doing that until that plant's on and I understand what the throughput looks like on it. And then at that point, based on real production, we will start to project what our revenues look like.
Yes, and that's something to look forward to. And that I mean, I say to people, we have to be patient, but it's nice to have a glimmer and something exciting to look forward to, and to do it right. I mean, if you do it right first time around, we get away from the speculation and, hey, can you give me a hint of this, or could it be this?
Yeah.
People love to play that game because it could get a stock moving, but that does not help a company in any way.
No, it doesn't. All it does is get you in trouble with the regulators.
Yes.
And that's another issue. I mean, we're not putting out any downhole information because we're the only people that ever drilled where we're drilling.
Yeah.
And it's cost us a lot of time and a lot of, in some instances, heartache and a lot of money. And we're not putting that information out. So now how does an institution go and validate what you have in the ground?
Yes.
I mean, we do have a preliminary resource report on well number 2 on the website that was done over a year ago. And there's some parameters there where you can figure out based on surface area. So then you can calculate drainage, porosity, permeability. You can play around with the average grade coming out of the ground. And at the end of it, you can figure out what kind of resource you've got there. But we're not putting that out publicly.
Yeah.
The other thing with helium that people don't seem to understand, it doesn't act like hydrocarbons.
Yes. Yeah.
You know, Rob uses an analogy where he says you take a pen and you put a dot on a piece of paper. And he says, then you draw out a methane molecule. The methane molecule is 3.5 to 4 inches wide and 3.5 feet long. When you start looking at porosity and permeability, those molecules move different through the system. You can water flood an oil or gas field. You can't water flood a helium field. All that's going to do is block off any helium production, and you will never recover from that water issue, ever.
Wow.
So we're stuck under the regulations that oil and gas companies have to adhere to, and they don't work for us.
No. Yeah.
We ran into that with well number 4. That was part of the issue with that news release. All the technical information we put into that news release was declared non-compliant by an analyst in Calgary. And he threw us a bone on somehow commingling the bottom 2 zones and coming out with a figure of 1.98 BCF of recoverable gas in place. And the market multiplied that by 1.137% and came out with like, okay, you guys got $500,000 worth of helium, big deal.
Yeah.
Well, those 2 zones were 78 and 38 feet.
Yes. Yeah.
So to be calculating, I think it was 10 feet he calculated.
Yeah. Doesn't make any sense.
Doesn't make sense. No. And I understood the market sell-off, and I understood that our market was way overvalued.
Yeah.
I would say that to Rob on a daily basis. Yeah. I don't know how we're staying up here at 450 to 495.
Yeah, at that point in time, sure.
Yeah.
And this is the tough thing with being in such a niche market in a helium space where, I mean, not only the price opaqueness, but there isn't like a Goldman Sachs helium analyst, you know?
No, it's really a lack of coverage out there. And the research that you do see out there, all those guys seem to plagiarize each other.
Yeah. Yes.
Like you can read these reports and they're pretty much all the same.
Yeah.
So the analysts are suffering with this issue as well. They can't get transparent information on the market.
Well, this is going to be exciting then for whenever you get to the point, we see the data, we see some of the flow rates, and then you're able to kind of say, here's what we have, because that would mean that you're having discussions with bigger funds, bigger teams, bigger institutions that are then looking at the data going, all right, we see the model, we understand, we see the numbers, we're putting it all together. That could be the legs that could really start to move things very quickly.
Yeah, well, when we've got some real numbers out of the processing facility, we've got ambitions of maybe uplisting in the US.
Yeah.
We've got those ambitions, but right now we just need to focus on what we're doing and get to that proof of concept in a final stage. And then at that point in time, you've got the credibility to move you forward on all the other different levels.
And we're there. I mean, we're so close. I mean, July is just around the corner.
Yeah.
I think you've got some permits for some wildcat wells as well coming in July maybe.
Yeah, we're supposed to be seeing some well permits coming in here shortly. So we'll be doing some more drilling this spring. We'll be seeing, we're supposed to start putting up the fence around the plant facility here this month. We should see delivering coming out of Genron on the modular housing units.
Yep.
It seems we've solved an issue with getting solar panels, which solved an issue, which was electrical panels. This battery storage issue is still out there, but we'll use CNG in the meantime.
Yep.
So we can run solar in the day and we can run CNG at night. I mean, you're going to have to be nimble when it comes to this stuff. But once this one's set up, moving forward and building additional plants and bringing more revenue on stream is where we're moving. We've already pre-ordered components for the Rolfing field.
Yeah, see, and that's great. And also just to remind people, the undertaking of doing this all green, like doing it properly with ESG in mind. I know that kind of triggers a lot of people, but let's be honest, it's coming. And that will attract a lot of these huge firms that if you can nail that down and do this once again correctly, green, with all that in mind, they can place money a lot easier than if you go, listen, we're working on it. They're not going to want to hear that.
Yeah, I mean, we probably presented to 100 investors in Europe 2 weeks ago, and they were mostly financial, family offices, institutions, and high net worth individuals, right? And that's really our focus right now. We can't be chasing the New York institutions or any of that. It's really a niche investor for us at the moment.
Perfect. Well, listen, it's a real pleasure to catch up with you and share with what's happening. I know there's so much going to be happening over the summer as well. There'll be lots of news.
Right.
And we'll be here checking in on it.
Sounds good.
Excellent. Well, thanks so much, Don. Really appreciate it. All the best.
Good.